In 2026, the American economy glows with skyscrapers and busy streets, but beneath the surface, hidden pressures quietly build, challenging families, businesses, and investors across the nation. Prosperity masks growing uncertainty. Wall Street flashes numbers every second. Traders react instantly to news, reports, and policy updates, but volatility has become normal, leaving investors cautious in a market that can shift in an instant. Household debt is at historic highs. Millions rely on credit cards and loans for basic expenses, while interest compounds month after month, slowly tightening financial pressure across countless households. High interest rates from the Federal Reserve make borrowing costly. Mortgages, car loans, and personal credit lines all rise in price, squeezing families and small businesses alike. Grocery prices steadily rise. Shoppers compare brands, switch products, and reduce non-essential items, feeling the quiet but relentless effect of inflation on everyday life and household budgets. Wages rise slowly but cannot match living costs. Housing, healthcare, and insurance consume more income, shrinking the middle class's purchasing power and increasing financial stress across communities. The housing market slows. Buyers hesitate, sellers wait longer, and foreclosures quietly appear, showing that real estate, once considered secure, is deeply connected to broader economic pressures. Automation spreads in factories, warehouses, and offices. Machines replace human labor while artificial intelligence from companies like OpenAI reshapes work, increasing efficiency but creating uncertainty for workers. Families juggle bills, savings, and investments. Daily life grows more complex as financial pressures rise, forcing careful planning and constant vigilance to navigate an economy in transition. Small businesses face rising rent, supply costs, and cautious consumers. Many owners struggle to survive, adapt, or close, reflecting the challenges of maintaining stability in a shifting economic landscape. Fuel and transportation costs fluctuate unpredictably. Gasoline, shipping, and commuting expenses quietly increase the financial burden on households and businesses nationwide, affecting nearly every sector. Emergency savings shrink as families use funds for routine expenses, leaving them vulnerable to unexpected bills, job losses, or sudden financial shocks, highlighting the fragility of personal security. Global instability impacts domestic markets. Trade, investment, and employment are influenced by geopolitical tensions, supply chain disruptions, and currency fluctuations, connecting Americans to a volatile global economy. Even modest inflation erodes purchasing power. Small price increases accumulate over time, affecting daily life, investments, and long-term financial planning, forcing families to adapt continuously. Financial security feels fragile. Steady employment, savings, and homeownership no longer guarantee comfort, requiring households to rethink strategies and plan more carefully than ever before. Technology, rising costs, and economic shifts demand adaptability. Those who prepare, educate themselves, and act strategically can navigate challenges successfully, while others may struggle to keep pace. The economy is in transition. Markets recalibrate, technologies advance, and systems evolve rapidly, requiring proactive responses from families, businesses, and institutions to survive and thrive in this new reality. Preparation, awareness, and smart decision-making are essential. Choices made today shape tomorrow's financial security, proving that vigilance, planning, and action are the keys to navigating an uncertain economy.